while being slightly fast-paced. Advanced Micro Devices, currently trading at $224.28, is up a remarkable 6.04% in today's session, a figure that tells you something significant is happening under the hood of this semiconductor giant. But the expectation that this is just another ripple in the volatile tech sea is a profound misjudgment. The reality is that the ground beneath the entire AI and high-performance computing industry is shifting, and this price movement is not a ripple, it's a tectonic event. We are witnessing a fundamental repricing of AMD's future, driven by a validation so powerful it has forced every analyst and investor to tear up their old models. The market has long viewed AMD as the scrappy underdog, perpetually in the shadow of Nvidia stock. The common belief was that AMD could carve out a respectable niche but never truly challenge for the throne. That narrative is now obsolete. The recent strategic partnership with OpenAI, a deal valued in the tens of billions, is not merely a supply agreement, it is a coronation. It signifies that the world's leading artificial intelligence research lab now sees AMD's silicon as a viable, powerful, and necessary alternative to what was previously considered a one-horse race. This is not about AMD catching up, it's about the market waking up to the reality that the demand for AI computation is so insatiable that it cannot be serviced by a single provider. This is a multi-trillion-dollar tidal wave, and AMD is now positioned to ride a massive crest. Today's trading activity is a direct reflection of this paradigm shift. We're seeing immense volume, currently clocking in at over 57 million shares traded, significantly above its average. This isn't just retail enthusiasm from investors using platforms like Robinhood or SoFi Invest. This is the unmistakable footprint of institutional capital reallocating massive positions. Major funds are being forced to acknowledge that their underweight position in AMD is now a significant portfolio risk. The intraday chart shows a powerful move upwards from the open, testing the 52-week high of $226.70. This isn't just momentum, it's conviction. Every minor dip has been aggressively bought, signaling that buyers are not waiting for a pullback. They are paying the asking price because the expectation of where this stock is headed has been radically altered. The recent news has acted as a powerful catalyst, shattering the previous psychological resistance levels. Price targets are being revised upwards across the board, with firms like Jefferies and Baird setting targets of $300 and $240 respectively. This isn't speculative froth, it's a calculated response to the projected revenue explosion. The OpenAI deal alone, which involves deploying 6 gigawatts of AMD Instinct GPUs, is forecast to generate tens of billions in revenue for AMD, potentially doubling its earnings outlook for 2026 and beyond. This is the kind of material event that fundamentally alters a company's trajectory, much like early cloud deals did for giants like Amazon and Microsoft. Many investors looking for investment help or considering self-investing through an individual brokerage account are now seeing AMD not just as a competitor to Nvidia, but as a core pillar of the future of AI infrastructure, alongside behemoths like Apple stock and Tesla stock. To understand the magnitude of this moment, we must briefly look back. For years, Advanced Micro Devices, under the leadership of CEO Dr. Lisa Su, has been methodically executing a brilliant turnaround. The company designs and produces high-performance computing, graphics, and visualization technologies. Its business is broadly segmented into the data center, client for PCs, gaming, and embedded markets. The Ryzen processors revitalized the CPU market, taking substantial market share from Intel by offering superior performance and value. In the graphics space, their Radeon GPUs have been competitive, though the narrative has always been dominated by the Nvidia stock behemoth. The acquisition of Xilinx was a masterstroke, broadening AMD's portfolio into adaptive computing, crucial for markets like 5G, automotive, and aerospace. Past earnings reports have consistently shown strong growth, particularly in the data center segment, with their EPYC server processors becoming a preferred choice for cloud providers. However, the market's expectation was capped by the belief that their AI accelerator program, the Instinct series, would remain a distant second. The reality, validated by the OpenAI partnership, is that the upcoming MI450 is not just competitive, it is a world-class solution that the most demanding AI applications on the planet will be built upon. This is the piece of the puzzle that has finally fallen into place, unlocking a valuation that was previously considered aspirational. The future outlook is where the expectation versus reality framework becomes most critical. The market now expects flawless execution. The reality is that delivering on a deal of this magnitude presents immense logistical and manufacturing challenges. AMD's reliance on TSMC for fabrication means it is subject to the same supply chain constraints as the rest of the industry. Ramping up production to meet the demand for hundreds of thousands of advanced GPUs will test its operational capability to the limit. Any delay or hiccup could provide an opening for competitors and spook investors who are now pricing in perfection. Furthermore, there is the risk of shareholder dilution. The warrant issued to OpenAI allows for the purchase of up to 160 million shares. While tied to performance milestones, it represents a potential increase in the share count that long-term investors must factor in. These risks are real and cannot be dismissed. Platforms like Fidelity Investments and Interactive Brokers, which cater to more seasoned investors, will have their analysts modeling these risks intently. However, the potential rewards are astronomical. The OpenAI deal is a powerful endorsement that could unlock similar deals with other hyperscalers. The market for AI chips is not a zero-sum game. Analysts estimate demand is outstripping supply by a factor of 10 to 1. There is more than enough room for two major players to thrive. AMD doesn't need to crush Nvidia. It simply needs to capture a significant portion of this exploding market. If AMD can secure even 20 to 30% of the AI accelerator market over the next 5 years, its revenue and earnings growth would be explosive, justifying a stock price far higher than current levels. Comment below what you believe is the biggest risk to AMD's growth story: execution on the OpenAI deal or intensifying competition from Nvidia. In summary, the recent surge in AMD's stock price is not an overreaction. It is a long overdue reevaluation. The market's long-held expectation of AMD as a perpetual runner-up has collided with the stark reality of its technological prowess and strategic positioning at the heart of the AI revolution. The OpenAI deal was the definitive event that shattered the old narrative, validating its technology at the highest level and opening the floodgates for a torrent of future revenue. While the path forward is fraught with the challenges of execution risk and fierce competition, the potential upside is transformative. Investors who are looking to build their wealth through online investing, perhaps using tools like Schwab Intelligent Portfolios or trading on the Fidelity mobile app, must understand this critical juncture. The tension is no longer about whether AMD can compete, it is about how much of this colossal new market it can capture. The expectation was survival and incremental gains. The reality is a legitimate challenge for leadership in the most important technological race of our generation.